Hello traders, my name is Gaurav Janjikil. I am a part-time trader. So the name of the course is Learn Elliott Wave Principle with Fibonacci Retracement. Okay, in this course we will cover the basics and advanced of Elliott Wave with Fibonacci retracement and learn some backtested strategies so that you will apply these strategies on various time frames and learn that accordingly. This chapter contains eight. This course contains 8 chapters, and each chapter will be published on every Wednesday. So first we will cover the introduction of the Elliott waves. In this course we will cover only the introduction of Elliott wave. So the goal of this course is who invented the Elliott wave, what is waves, what is fractal, importance of fractal in Elliott wave. Elliott wave cycle means how many waves consist of in one Elliott wave cycle, introduction of wave 1 to wave C. So these are the 6 topics that we will cover today in this video or in this lecture. So the first question is who invented the Elliott wave? Answer: Ralph Nelson Elliott invented the Elliott wave in the early 90s. As you know, that time charts were not available because there was no internet. So Ralph get the data from Elliott get the data from various resources, and he found that he worked on various you can say it various time frames: yearly, monthly, daily, weekly, and hourly and 30-minute charts also. And he found something very interesting that is known as waves. What is waves? Waves, Elliott found that repeating pattern appeared between tops and bottoms, and he named these waves. If you see the basic example of Elliott wave, if you see there is a repeating pattern, wave 1, wave 3, then wave 5 are repeating. So that is known as wave. Wave 2 and wave 4 are also repeating, but these all the things are waves, means they are repeating itself, no? What is fractal? Before moving to further, so we have to understand the fractal. What is fractal? What is fractal? So this is the important term. It is geometric term that repeats its pattern at different scales and reduced in size every time as they are repeated. The best example of this is tree, because I will show you because I know the definition is little complicated, but after seeing the tree diagram you will get it what I mean to say. If you see that the fractals means that what does the fractal say? It's a geometric pattern, geometric shape that repeat its pattern at different scales and reduce its size every time as they repeat it. Means every time it's reduced its size as they are repeated. If you see 1, 2, 3 and 4, each have the Y shape. If you notice, this one is the Y shape, this one is also the Y shape, this one have also the Y shape, and this one have also the Y shape. But the size of this reduced every time as they are repeated. Means that 1 is larger than 2, 2 is larger than 3, 3 larger than 4, or you can say it vice versa. 4 is smaller than 3, 3 is smaller than 2, and 2 is smaller than 1, because it pattern is repeating but the size is reducing, and so on. I think that you will got it by using this what is fractal. Okay, now other examples of fractal are foam and sunflower. Now, what is the importance of fractal in financial market and in Elliott wave? If you observe, first we will understand what is Elliott wave. Elliott wave cycle. Elliott wave cycle consists of 8 waves. We named it 1, 2, 3, 4, 5, A, B, C. So Elliott wave consists of 8 waves. If you further divide it into these 8 waves, you will notice that this one is on the basis of monthly, this one is basis of weekly, and this one is based on the basis of daily. What does the fractal say? Fractal says that its shape is reduced every time as they repeat it. Means if you check the wave 1 here, reduced its size because it's repeating. If you check it here, reduced its size as they are repeating. So this is the use of fractal in financial market. The definition is very simple. Every waves is repeating. If you check in monthly, daily or weekly, but the size is decreasing as we move uh, into lower time frame. Okay, and this can be also further divided daily. You can also further divide hourly can also divided by minutes. In minutes you can also divide by seconds. So this is, I am showing you the example of three. You can, if you check it more, then you can divide it into more parts. So as I told you that Elliott wave consists of 8 waves. Elliott wave cycle consists of 8 waves. The first 5 are the impulsive waves, and from wave 1 to wave C are the corrective waves. Impulsive waves are those waves that is move in the direction of the trend. We check 1, 3, 5. 1 to 5 are move in the direction of the trend, but from wave A to C are moving against the direction of the trend. So this wave A, C and are the corrective waves, and wave 1 to 5 are the impulsive wave. If you come here, you will notice the wave 1 to wave 5 are in the impulsive waves because it's move in the direction of the trend, and wave A, B, C are move in the direction opposite to trend. So these are the two things. That is how the Elliott wave cycle works. What is impulsive waves? Impulsive waves. What is impulsive waves? As I have told you that it moves in the direction of trend. So if the trend is bullish, then this 5 wave will form this way, and if the trend is negative or bearish, then our impulsive wave look something like that. I think that you got it. So now we will study each wave in very short, or you can say only the introduction. We will not cover the details of the wave. We will cover in the upcoming chapter. We will cover the each wave in short in this chapter only. So wave 1, if the market is down and now no seller left, so the price will go up, and wave 1 is very tough to identify. So first wave, if the market is in the downtrend, if you check it and no seller left here there is no seller, so price will go up, and so this is the start of the Elliott wave cycle. But it is very tough to identify. So very few Elliott wave trader will take the trade on wave 1 because it's very tough to identify. What is value 2? This is a temporary correction. Means that some traders is if you see the wave 1, you notice it's, if you see there's still some traders left at here. Some traders still left here. They haven't booked the profit, so they will book the profit at wave 1. And now, so as I told you, this is a temporary correction. So now the profit booking will happen on wave 1. So many traders think that this will continue because the market, due to this, market will go lower, but this will not happen. So it's only for the trader who haven't booked the profit on the lower of wave 1. So they will book the profit on wave higher of wave 1. So the wave will come to the will come on wave 2. Wave 3. So this is the most important waves in the Elliott wave cycle. It is also known as trend reversal. Once the wave 1 has been taken out, means the higher of wave 1 is crossed. So we were hoping for the new height of the Elliott wave. Now we are hoping for the new high of the Elliott wave. So what does mean? If the high of the wave 1 is break, then we will we will assume that the higher then new high of Elliott wave will form. Typically, the wave 3 is the longest wave in the cycles. Trend form. So trader will avoid uh, most of the trader avoid the to trade in the wave 4 because it's a downtrend to sideways. Volatility is very high in this. Most false signals coming in the wave 4, so not recommendable for trade. If you check, some trader will book the profit here. Okay, now it will come to the wave 4 because some trader have booked the profit, but now the market will be on sideways, so trader will not get the correct signal, or you can say the false signal you will get it in the wave 4. Important wave for trading, this one. Now last legs of impulsive waves. As you know, these 5 are the impulsive wave. It's a last wave of the impulsive wave. We will discuss this wave in the upcoming lecture details, but I will told you one thing. Once the wave 3 is got crossed, higher of wave 3 got crossed. Now we are assuming that one higher or one that it that now the now this stock will move higher of higher. Now wave 1. So here end of wave impulse is done. Now we starting corrective waves. In most cases, sharp fall will come from wave 1, wave 5 to wave A. So it's a bull trap. Wave B, it's a bull trap. Short duration, good selling opportunity. If you have the stock, then you can sell it. Okay. It has the same characteristics. Means many characteristics of wave 3 are found in the wave C. Short confirm if the swing low of wave 1 has broken. If the swing low, if this point is broken, then we can take the short trade. Thank you guys.